What's good, ladies and gentlemen? What's happening? Eddie Harvey here from TradeWithEd.com. All right, guys, today we're going to be looking at a rally-based rally trade pattern, guys. In my last video, I talked about identifying the four different types of supply and demand zones, right? Well, I'm going to talk about those in a little more in depth and showing you how you can enter the market for a trade based off of these different supply and demand zones. So let's get into it, guys. I'm on Euro JPY, and I've already identified an area where I want to show you this pattern, okay? Obviously, we have different highs and lows right here in the market. Even if I came from right here, this was the lowest point of the market, guys, and I had a low here, then this created a high right here. Then from there, came back down and created what, a higher low, a higher high, and we had another higher low where I pulled back to this area. So I want to start from this area right here, and let's show you where we have a rally, base rally at. Let's identify that first, right? So if you look right here, let me just go to the charts, get an arrow right here. Let's say we start at this point, the market rallied up, right? Then from here, it leveled off where it created what? A consolidation zone, okay? So this rectangle, if I take this here, this is a consolidation zone that was created. And then out of this consolidation zone, right, price pulled back to this level where it created. We have a couple of what equal lows right here, okay? And then from there, price then pushed up. Now, if you look at this here, it rallied, consolidated, went pushed, consolidated, then it pushed again. So this is a rally-based rally, all right? So now, looking at this based off of this trade pattern, how can you enter the market based off of what you're seeing here? There are a multitude of ways, guys. I'm going to show you a couple of ways that you can enter the market off a simple price action. And, you know, some people trade them in certain ways. Some people don't. Everyone has their own style. So I just clear this out. And I want to focus on right now is this consolidation zone. Okay. So let me just, let me section off this consolidation zone really quickly, right, to give you guys a better view of what I'm looking at here. So look at that. That was the high for this area, right? And then we had the low right here, okay? So obviously, you know, we're gonna count where price went up and it tried to push up to this area, came back down, right? Pushed back up here again, and multiple times it pushed up. Then it came back down, then it pushed up, okay? So inside of here, right, if we're looking, we're going up, the first type of trade, guys, that you can take out of this, get my little brush here. I'm looking at this, right? Right? So what do we see here? Obviously, we have you see this is what the letter M, right? Because we have pretty much a double top, right? We also have a double bottom right here as well, okay? Trading double tops, double bottoms, different things like that. I don't like trading in consolidation zones personally, but some people do. So if we're looking at this and we're saying, okay, price went up, right here we had a touch, it had multiple touches where price went up, it came back down, that's one touch at the bottom, it went up, it came back down, we have a second touch at the bottom. So one can assume that price is going to do what? Based off of what you have right here, price is going to then, from this point, what? Push up, right? And it did. So if you're looking at trading this off of that double bottom, off of that W, right? Well, you can see it's forming a W. Came down, it went up, came back down for that second point. Now it's pushing back up. So for entry, you can say somebody could have got in anywhere near. Could have got in and took this up. Even if you took it back up to the top of that zone, that's like a 78 pip move. But, you know, if you're trading double tops and double bottoms, which some people do, right? So if you're looking at an entry, you could have got in once it broke off right here, and let's say on the lower time frame or even on this 1 hour, you could have waited for the candle to close up here, then took it up, put your stop loss down here. That's one way you could do it. Or what a second way a person would trade is that they would wait for a breakout, right? They would wait for price is bouncing off the zone. So instead of just now trading this in the zone again, called a more consolidation, they're waiting for price to push up out of this consolidation zone. Once price pushed up on this candle right here and it broke out, right? Some people will what? Take an entry right there. They would enter here, place that stop loss, possibly right here below that candle, or could have had it below this this entire zone down here, right? Had to stop down here and then rolled this up. And then you see it pushed back to right here and then it continued up, okay? Now, that's the second way. You can just trade the breakout. That's a breakout, right? Now, the third way, the way I like to personally trade off of these patterns is I like to trade for the breakout, but I also want to wait for the retest, all right? The retest coming back to that zone to let me know that this area, this resistance zone is now, as it shows right here, price broke out, it came back and it retested. Yes, I had to wait a little longer, but once it retested, this solidified to me that this was now what? And then continued up. This ceiling is now a floor. This resistance area now became support. So the breakout and the retest. Price broke out. You can see right here, it rallied, got the base, it rallied up, but once it broke out, a clear breakout, it created a new higher high right here. It came back and retested this area, created a new higher low. Then it continued to push up to the upside right here. So for me personally, that's when I would have took the trade. Okay. So let me show you what that looks like. What I personally like to trade and what I'm looking for out of this rally-based rally, right? I'm waiting for price to break out, retest, then push up. So for me personally, my entry would have been right in this area here. Okay, right in this area here. So if I'm looking right here, once it closed with retested with this bearish candle right here on this next candle right here, this bullish candle. Once this candle closed bullish, I would have entered right here and took that up for me personally. And if you look right here, minimal drawdown, but a beautiful amount of pips to the upside for a buy. Okay, so even if I would have got in, let's say if I did get in, not even, I like to enter off of the smaller time frames. Let's just say I entered off of this higher time frame here, right? Straight off the 1 hour. I do my markups off the 1 hour. I enter off the 15-minute or the 5-minute, sometimes the 3-minute. But let's just say I said I'm sticking straight purely to the 1 hour chart, right? Once it retested, I like to get a close back out of the zone, even though it already retested and rejected. Let's just say I decided to go right there, okay? And I went with, even if let's say if I went with a 30 pip stop loss, let's say 30 pips, let's say right now, okay, we got 30 pips. Price, the lowest price went was a few pips of consolidation, few pips of drawdown, and then if you look right here, it went up for 133 pips. So that was a nice almost 1 to 4.5. Yeah, so my entry was here. The most drawdown I would have had on this was about 6 pips. It took off, went to the upside. That's what I would have did. That's how I personally would have traded it. But teach his own. You could have caught it because the momentum is bullish, right? You're going up and the trend is your friend. You're trading with the trend. So if you're looking at it as rally-based rally, hey, I could have caught, if I would have traded, the W pattern or whatever, like I was showing you, I could have took an entry here. If I would have traded the breakout, I could have took an entry here. But if I'm waiting for the break and a retest, this is where I'm taking my entry to go up. Now, if I'm looking for this, well, I don't want to trade against the trend. But if I'm looking at this is a zone I have here to say, hey, but what if price didn't come out of that rally-based rally? After it rallied up, it could have eventually came back down. It couldn't have stopped here. It could have came back down and pulled down even deeper. But if it pulled down even deeper, it could have changed his mind and said, you know what, we're just going to go ahead and do a shift in momentum here, right? We're going to do a reversal. So if I was trying to trade a reversal, instead of it retesting off this area and making this area of resistance and newfound support, I would have been looking for a price to now instead, let's say, come back down from up here somewhere, right? Anywhere up here. Come back down from here. Then after that, I would have wanted it to retest this area, making this support the newfound ceiling, and then continue pushing down. And that's the only way I would have potentially looked at this for a potential sale. But When a trend is your friend, the way it's moving up, guys, you can see it continued up and it continued up and up and up and up. So that's how I would personally trade a rally-based rally. Those are different trade patterns, and that's what I like to trade. So I hope you all got some value out of this rally-based rally video, guys. I will definitely go over. The next one will be a rally-based drop. I'll talk about that in the next video. All right, guys, if you want to learn more about Forex trading, simply go to tradewithed.com. Hope you all got some value. If you did, let me know, guys. If you want to see more of my content, be sure to subscribe to my channel and also hit the like button if you did find this to be of help to you. Appreciate you guys. Talk to you later. Take care and have a great day.